Welcome, it's the Market Sniper. And in this video, we are going to discuss gold. That's right, gold. And we're going to cover it across a number of currencies. Also, we're going to talk about oil, WTI. That's right, the energy complex, and why we are calling for that 40% spill, what it means, a couple of stocks that we think are going to lose at least 40% and possibly more. Right up to a 70% market cap decimation, including uranium. We're going to cover uranium as an energy complex and why we feel those could see similar degree of losses and why this points to a demand destroying event. In short, I am going to be telling you today that the beginning of this contagion that you have been seeing coming to you in terms of the recent bank failures. Is Deutsche Bank going to do a Swiss roll? Who knows? But I'm telling you that this is the beginning of serious contagion. And if you've ever thought of becoming a sniper to make money on the downsides, now is your empirical moment. By the way, the money you have in your banks may not exist in its current form in a number of weeks, months from now. It truly is that severe. You can make to the downside great goals, and there are things that are going to be going up, and we're going to be talking about them as well. And let's get straight to it. So we're looking at up top here. We're looking at gold. Now, a little bit of interesting input to give you here on this one, and that is that gold has been breaking out of that capping descending rhine line. In other words, it's a continuation pattern that has triggered right now, and in fact went as high as a 2000 run before getting a little bit of a down leg. Now you might notice that we're on quite a high time frame here, and there's a reason behind that. I'm ready to run from our RL2 of a previous upside HVF a pole. And that is because I'm essentially referring to this entire period since the highs of 2090. There you can see the tag up top there. I am now going to refer to that as our apex of our flag, and that the subsequent move is in fact a pole that can be bumped to the upside. So let's get that drawn in and highlight that. So we're talking about this move over here. This is in dollar terms, by the way. We're starting off with the most recognized. We're going to be pointing out in a minute how gold has been performing against all the other fiat currencies, and it only gets better generally. So we're going to grab that and we're going to duplicate it. By the way, I'm going to switch this also to a log scale chart so that you can appreciate this. It's a longer time frame. So generally, as you go into the longer time frames and you've had substantial moves, which you've had, we tend to pivot to log scale. So I'm grabbing that pole and I'm going to put it at this low because we have now broken that low. That's right. So round about, where was that low? Yeah, 1620-ish. And I'm going to project forward to the upside, and I'm going to give you a target. That's right. You right now are going to be getting a target out of me for where gold goes to next, and you're going to like it. Oh, you're knocking on the door of the big 3,000, and it could be very, very good for the precious metals complex in an environment like that. 2,900, let's make it solid, 2,905, and it's going to be bulking a little bit at the big 3,000. Now, you wonder, what will silver be, many of you? By the way, this is a very good move for both gold, but it would probably be even more spectacular in terms of what happens for silver. So that is a triggering of a pattern. We've had a number of critical triggering events occurring. This is the times, my fine fellow. If you've been waiting, when reset, these are the times, these are the events. The events are happening right now in front of you. They are taking place. Don't be a boiled frog and not notice that the jacuzzi got a little warmer and that it's only by minor increment. You are watching the wind down of the holy satanic trinity of fiat currency, FX currency, debt, and the banking system that proliferates both the currency and creates the debt by creating new money. The troika is coming to a rapid end. This is why you're getting the enlivenment coming into the precious metals and also recently in Bitcoin as well. So that move could see you at a 2905 target, which could actually lead to a technical run of 3K and a bit of a pullback before you get some degree of significant rest. Don't forget, you're above 2K for the first time ever in 2020, late 2020, after the events of March 2020. So that's truly, truly enlivening. That's a big macro call on a bull flag event. We are calling a 3K gold coming up. And boy, that should be exciting for silver. But before we leave to discuss silver, let's take it off and just go and have a look at a couple of other things. What about gold versus the euro, for example? Very close to new highs, gold versus the euro, more so than the dollar so far. What about gold pound? Well, this month that you are in is the month that you made a new high, GBP, gold versus pound. In fact, you left this critical level that was 4 times resistance. You just ran 1575, you just ran, and you touched it there. And now you have broken it with real momentum. This is precious metal season, my friends. That is the anti-fiat. That tells you all is not well. This is your insurance against bad money, non-sound money. Gold is your insurance against non-sound money. And boy, have we ever done non-sound money. Sure, Powell did 25 basis points increase whilst opening a major lending window, whilst getting all the big primary dealer banks to put 30 billion into First Republic, whilst all the other central banking cartel members all woke up on a Sunday and all issued a joint statement. You are in a leper colony. This is your new world order. There is no nation of sound money, particularly in the Western Axis. And as a result, they are coordinating their collapse together. They are coordinating their collapse together. This has always been their game. How about gold versus the yen? One of the originals on paper that is highly indebted. That's right, new highs during the course of this month. A little bit of pushback now. We're talking to you, it's Friday after a very eventful week. New highs, Japanese yen, and of course the Australian dollar. How's that going? Whoop-de-doo. 2,800. We told you that was a critical level, really ascending structure. Touch there, just run on a wick and just run on a wick there, and then smashed. This is a smashing, and we have a target going towards 3,600 just in this structural move, and that has been broken properly, and now you're already at 2,977s. Very soon, the Australian dollar will be 3,000 something in an ounce per ounce on gold. And what about those emerging markets that we often talk about? Good old South Africa, new highs this month. That's right. You would have to be looking at up to, at some point during this week, 37,000 Rand for a single ounce of gold. 37,000 Rand. Currently trading just under 36. New high, my friends. New high. What about the Turkish lira, for example? We have a look at the Turkish lira, apart from a bad wick there and a bit of rescaling here. Let's get it right. New high this month. Gold is making new highs across emerging nations and the big nations, such as the ones we've already mentioned: British pound, Australian dollar, and very close to on the euro and the USD. What did you get on the Indian rupee? Again, new high this month. In fact, it was this week, in fact, and still trading above, if it were to close here for the month, previous month closes as well. So you're getting the message. It's coming on strong. What about gold silver ratio though? Because silver was a little bit slow to start, but it picked up and started getting a little bit more interesting. It's still got a trigger coming through its particular continuation pattern. It dug deeper on this inverted head and shoulders. I'm going to run that on the weekly for you. You can see that reversal that was there. There was a neckline here. You came and kissed that neckline again, and now you're making some progress to the back up. It's still lagging gold overall, but it got a little bit more interested in the latter half of the week, and this has had an effect on the gold-silver ratio. I'm going to take you back to the monthly on the gold-silver ratio and show you this. So a while back we had said there was possibility of a head and shoulder, and then we scrubbed that idea and said that's the other scenario that we also gave you when we pointed out the head and shoulder, and that's a broadening structure for your right shoulder. It is a broadening structure like that. And we pointed out the way these fail back down is you get a turning point on your splitter. And here right now on your splitter is that turning point. I'm going to put it in blue and put it on for you right here. If we were to finish the month in and around here, you are having a major rejection that is looking like a shooting star for silver in terms of gold. That's right. So you went as high as around about the 88s virtually. And now you are trading in and around the 85s on number of ounces of silver to secure 1 ounce of gold. And that, my friends, is a beginning of a potential turn. And how would that play out, you might ask? Well, it might play out something like this. A reversal down to here, a bounce, and then a giving up of this basing ascending grind line, which is the armpit 2, and ending up at some point down here on a 65, where you might get a little bit of a rally for a while before breaking downtown and going all the way down to sub 33 as part of a major move to the downside. On a head and shoulders, by the way, we expect further overperformance to that. And as I've said before, I would look for single digits gold silver ratio at its more extreme. In other words, the gold to silver ounces will be less than 10. So 9.99 and below at its extremist point. That is going to be a very beneficial environment for silver. Very beneficial environment for silver. So this head and shoulders is coming to fruition, and if that continues its pullback, that's going to mean even if gold is a little soft, that's going to mean silver is getting a bid. Don't forget, we have the mystery COT reports that disappeared because of Russian hack or narrative, and as a result of said software we never got to get, and who knows, mystery in the ether. Tell me a lie, sell me a bag of stones instead of nickel, I tell you, and that is what you're getting in this fraud world that we currently have. So watch that. It is seminal, and it could be a really imperative moment. So without giving you everything, we like wheaten, for example, precious metals, which has gold in it. Very similar. We see it running the 60.13 in due course. Also a great break for continuation. By the way, it will have more in it than that 60, because you would do the same thing we did and run a bull flag to the top here. It's not exactly a perfect flag. It broadens slightly, but it's significantly close enough for us to do targeting in such a manner. In the log scale, I would say you're going quite a bit higher. That would point to around about 110 in the likes of wheaten, which, given that you can buy it sub 50 right now, it's pretty interesting, or should be pretty interesting to you in terms of that, on that flag bull that is currently potentially in play. So that's one that we look at. EDV is another one. I would expect this one to break. This one I'm looking for 204. That's right, from a 30. It's around about 30 at the moment. 30.97. You can buy it for less than 31 and run it to 204. So there's two equities. Want to find out more on what other equities we find interesting in terms of precious metals? The first link below in the description. Book a call. Talk to one of our community members traders that are on borders for new members. Ask them whether that was an investment worthwhile of making. You should get on while you still have the money in your bank account, guys. I truly fear for the great UBI and the CBDC that cometh. Oh dear, oh dear, oh dear. While stocks last. Get on, get on, get on. What else are we going to talk to you about? Well, we mentioned uranium. And I'm here to say I'm concerned for uranium and the energy markets overall. That break over there is quite bearish. We also see, for example, whoops, that's a fat Koki. How about that for fat Koki? Let's just go back a couple of levels, shall we? And highlight that as a bit of a left shoulder, a complex head. We truly get these draws. And then very much like an inverted structure, there was the basing ascending grind line. Here's your neckline in essence through there, a deep dive coming to the downside. We're seeing energy complex as a whole go down. Natural gas has already been slammed. You saw that head and shoulders. We've shown it a number of times getting hit. Here is uranium running into trouble. This is UEC. This one has been knocked as well. You can almost leave the same jaws on. Broadening, you were warned by the nature of the technicals. That was its move up. You got that kind of continuation, all well and hunky at that point. You got another move up of a similar type gestation, and then you got the broadening structure here, which is warning you. So your first warning came here on the break, return move back up. This is a warning indeed of no longer easy scores to the upside. So that would be your left shoulder, your head, and you're going into a flat, lengthy right shoulder, which is in fact an inverted HVF structure that we have targets for. So you should have been short at 349, and you should be looking for 1.38. 1.38 from 3.49, fine fellas. You know, you don't get ballsy calls on equities anywhere else on YouTube like you do around us. Don't forget, on energies, go and have a look at our macro link on energies. We are the guys that called single digit oil when it was $70 plus. That's right. And reiterated at 67. We're not shy. If it's looking like it's going down and we're getting a demand destroying event, we did it in 2014 and we did it again in 2019 for its subsequent collapse that occurred in the first quarter, March. That's right, this March of 2020, 3 years ago today, when they started their great scam and the demand destroying event that put small businesses out of town, out of business, and they pumped the big mega corps, which incidentally they also happen to be doing to the small banks, and everybody pump running into the big banks. Funny that, so much easier to issue a CBDC if it's just going through a few different brands of the same mega corps that are at your Bilderberg meetings. Yes, indeed. Anyway, enough of that. That is a clear break. That's got downside. You've already had a spike to your second interim now, subsequently. You're getting this, by the way, guys, well after the community gets it. Sorry, they've respected me with money. They need time first. And as we see it, as we discuss it, those things are being put on the table. It's so much better for you if you're a short at 349 or even on the breakdown here, north of $3, but now it's 274. Small rally at the moment on the weekly. Do not be too fooled. Further downside to come, in our opinion. They were first made nice and everything calm. No, don't worry. We've all got it in hand. We are very confident in the robustness of the financial system. Jim Cramer will tell you, as he has done literally on Twitter, Deutsche Bank is very safe bank. There's nothing wrong with Deutsche Bank. Of course he will. He also said the same about Bear Stearns around about 15 years ago, I think it was 2008. So you know who you're talking to when you're hearing those kind of voices. So uranium as a whole, we're bearish. Uranium, you need to watch that one. It's going to go down. There's been a lot of people that got sucked into that trade, and it was a good trade, and it was worthwhile being sucked into it. However, in a demand-destroying environment that we are going to get, it is probably overbought and is ready for a serious correction. So what about this oil? Well, I'm going to show you oil. In fact, I'm going to show you Brent oil. I'll throw a curveball at you. Brent instead of WTI. And I'm going to divide it by the Dixie. Brent is particularly used by the pan-European axis, which is the Eurozone as a currency, the British pound, the Swiss franc, and everybody else. When I do it for WTI, I get 0.38. When I do it for Brent, I get 0.41 stroke 40. This is your structure, and you did break here. That is a key sell off. If I do it for the WTI contract, you will see, in fact, that we are up. We're getting an even deeper dip in terms of, remember, the Dixie is around about 104 odd as a measurement. So instead of dividing by 1 in terms of oil, you're dividing by 104. That's why you're getting these 0 points measurements. So let's have a look at that. US oil divided by the Dixie. Come on, come on, come on. That's how it goes. So again, if we draw what we see coming here, again with a fat Koki, broadening structure coming into this, which gives you your left shoulder, big slam down. Oh, it's terrible draw. Let's use a straight line, shall we? There she goes. An ascending megaphone on a bull pole that we called would be a reversal after it traded so low. It was a bit of an easy call after you've traded zero. It was never going to disappear, was it? That was the left. And in actual fact, you will see on our macro link, which I will have pinned in this video, that we called this top at $129, which of course is 1.3 when you divide by roughly the 100. This is, of course, an inverted HVF for your right shoulder. Very common that you get inverted structure. And this is your blow-off head where you failed to make a new high on the secondary attempt, which also gave you a double top-ish that was subsequently made to the downside as well. So you have been getting warnings that this was coming. You have been getting warnings that this is coming. You could have been short up top here at around $75, $74 to the Western Texas Intermediate oil contract. Now around 68. Still no great shakes. Much more to come. The downside structure, much more to come. You will see it at around 0.38. Let's put it on the Western Texas and show you the draw there. There it is, 0.38. 0.38 to the downside. Again, similar structure, broadening, blow off top head, failure to make a new high, giving you this double top Batman ears head, down, 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 to roughly the 0.7s as your neckline divided by the Dixie. So we're looking at Western Texas Intermediate, but with the dollar removed, looking at it with the dollar index, which is 52% euro, but a pound, but a yen, but a Swiss franc, bit of it all. Downside break, return move that happened perfectly to our neckline and is now fizzling back down. A spiller, an absolute thriller to 0.38. You've been warned here first by us. That's right. And you've seen a couple of those small cap stocks in inverted structures, Sandridge, BSM for sure. We also expect this fella, MID, middle B, to spill its guts, breaking this basing ascending grind line. Also a bit of a broadening structure of its own there, and also a little bit of a head and shoulder of its own as well after making 201. It's sitting in and around 136. Where do we expect it to go? 77 to the downside. Big shouts indeed. What about the Bloomberg commodity index total return, which is quite heavy? I expect the energies. Again, left shoulder head. We expect this to spill to make the HVF target, give you a little bit of a rally for a right shoulder here, and then spill and break down further. So there's going to be multiple legs to this. There will be fake relief moments to shake you out of your trade. Do not be fooled. This is the flight path we anticipate will take part. A run that will make the inverted HVF's target there, and a little bit more that'll technically trigger the 2750 neckline. Then you get a rally for your right shoulder, which is what we're indicating for you there. Down, 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 and then you go. Lots of key levels to be run, potentially even 17. So this cluster of 18.44 down to 17. iPath, Bloomberg, Commodity Index, total return, currently at 30.67, and you're getting a near halvening to the 17 stroke 18.44 range to the downside. That's right. Wow. Think about that for a minute. Then, of course, there were the banks. We do love the Swiss roll, Credit Suisse. There she blows. By the way, have a look at this guy. It was at 77 at one point not too long ago. Here you go, roughly around May 07, 77.5 euros. Now 0.85 cents of a euro. We saw this in the banking index, which is a bank ETF index, before the events that have recently transpired, Silvergate, and of course, New Republic Bank and Software or Silicon Valley Bank. That's our friend. So a little bit of bearish structure, a little head and shoulder monarch down there that brought you down there, a little bit of structure here. We see this 30.53. This has already gone down a long, long way. This trade has already left town. You could have had it at 44. It's now 35, looking for 30, below 30, starting with a 2. So what else on the energies? There's Ring Energy, another case, very similar structures across the board. This is what makes it easy and for us to see. You gapped up. Look at that gap. That's your neckline, 1.08, my apologies. There's your blow off head, down, 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 and you made the same neckline there as you did there. And now you're into your right shoulder, which has just quietly rolled over. Boom, 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 down. It's currently at 1.8. We still see below 0.95, below 0.95. That, my friends, is a virtual near halvening. Even if you got in now, if you'd got in at 220 up top here at the neckline, you would have been on for around 60%. 60% devastation in Ring Energy. But probably the biggest faller, in my opinion, is going to be Vulcan. Harder to short, small cap. Also got a head and shoulders to run 1.5. You could have had it at $6, $6.03. That's our just-in-time final entry. $6.03, super tight risk reward. That actually needs to come down to the head and shoulder target, because we would hold at least till there. That is an 8.85 in terms of risk reward ratio. You could be building wealth right now in an environment where everyone else is facing financial devastation, where the dollars in their bank accounts will be destroyed. That's right. And this is going down, in our opinion, some degree. What about those uranium trades in terms of equities on uranium? URC, we see uranium royalty running to 123. It's at 274. You could have had it short at 3. These have only just triggered. I'm not, you're not being that late. You're not being that late. Again, it should be obvious, the head and shoulders. This structure is common across all these equities. Why? Because the main commodity that they are based in is doing that. There they are, guys. There they are. It looks the same. The song remains the same. This is pointing to real demand destruction events. People are not going to be consuming energy. They're not going to be consuming oil, either a lockdown of some sort or a major recession. Just see reduced purchases, reduced deliveries of items by your New World Order, one online store, Amazon, or etc., wherever you guys are buying. 123, currently 274. Huge, huge, huge corrective move. And that's on uranium. Don't forget, in the face of a hot war in Russia and Ukraine, we are calling crashes on oil. Don't tell me that's not ballsy. 40% crashes on oil. So, we give you the news before the news due to HVF method that you'll be learning in the best recorded way. Everyone who joins realizes this is not a Discord group, a Slack group, or a WhatsApp group. Real commitment to high quality recording. And go, wow, you've really done this well. I'm surprised. I got more than what I thought. This is a common refrain. Join now while you still have the cash. Be part of the community. If we cannot earn you a multiple return on your investment, then we failed you. 14 days money back. If you come over and your impression is that the content we have recorded is not to a high standard, the group and the people that are in there are not to a high standard, you can have your money back. So there you go. That's an inverted HVF. Ziggity zigzag, 3 impulses into the low. That's based on the neckline. Spiller, thriller. You can draw that if you want. Uranium royalty, but the big sell-off, 0.9, still above 2. And you could get a rally back to 2.19. You should have been short at 2.3. Nonetheless, you've still got massive potential for real gains to the downside. Royalties in uranium. Yep, it's all down for us. I'm not going to give you them all, and some are not on the list that you're seeing here. So that's a little bit on uranium, some of the stocks that will win, oil, some of the stocks that will win. The short bias and the long bias has been gold, and till recently Bitcoin, although I think it's looking a little bit tight, could have a pullback before going higher later. So yeah, watch out for that. What else have we got for you? Yes, the yield curve. So let me just nail and finish this story. For those of you that think, well, it'll just be another dip and then there'll just be more QE and we'll just go round the loopy-de-loop cycle forever, like it's always going to be the same. I have bad news for you. The song doesn't always remain the same. That is your 30-year. I'm going to take the 30-year yield. I'm going to deduct it from the 2-year yield, which is USO2Y. So short-term rates taken away from long-term rates. What is what you get? Oh boy, guys, here is what you're getting. This is what you need to realize, and I will do the same for the 10. Wow, I mean, this is scary. This is the most reliable advanced indicator. Yes, listen to what I just said. The most reliable advanced indicator of a new recession to be encountered. So in 1988, you crashed, you got the boom. It was the 1991 recession. This was the trouble that occurred. During 94, back end of 94, going into 95 there, and then again there, you had the Asian and then the long-term capital crises. They came here and here. They follow. This is a leading indicator, and that was not even a full inversion. Subprime, this is December 05 there. And by the time you're heading back out, it was 2007, and Lehman's occurred 08. That is your crisis. Now, you have never gone so hard, so fast, so deep in most of your lives. Unless you were around during the Volcker era, you've not gone this low before. That's right. So let me just show you. This low that you are currently in is deeper dive than the subprime crisis, the dot-bomb crisis, the 1989-1991 Japan hyper overinflation crisis, the Asian crisis, the sovereign debt crisis, along with the long-term capital crisis. Just about all the major financial events that you should know about are here. post the Volcker era of 82, which, by the way, was a mega bull market for gold and silver. You think silver's valuable today? It traded $50 intraday back then. So the problem comes when you return back up from your negative yield inversion. When you return back up, and this is what's going on here. And when the harder and faster in, the harder and faster out. And in fact, you have already had a wick take you above the zero line after this negative inversion, which is your most reliable point of inflection. That's right. In fact, on the 30-year, this is not even a yield inversion, and you got the 2019 repo rate crisis that ended up with a CV19 March 2020 events. Leading indicator, then the label for the crisis comes. So let's have a look at the same indicator only with the 10-year, so that you're seeing two forms of long-term debt minus the 2-year, and you can appreciate this in the most fullest sense. Why it is now. It is now that it's happening. I've annotated this one absolutely to the hilt so that you can understand it and see everything that's been going on each time, and have a look at this. This is your monthly. Let's put that guy over there. Let's spread it out a little bit. So your early 90s slump. Boom, you invert there. Here was your crisis in red, your Asian crisis and long-term capital. Here, boom, the red boxes come after. Post.com 2001 and 2 and going into 3 before you recovered fully for the recession. Your subprime, there you break. It was December 05 into beginning of 06. You pulling up out in June 07. Lehman's was 08. But you already knew, you had that stall feeling in 07. It was like, ooh, things going a little bit weird. That's right, my best friends. That is how it happens. You had the inversion here on the zero. That was the repo liquidity issue, October and September of 2019. And then you went into the CV19 and lockdown events. What is happening is the ability to get higher here is getting less and less. The break will come sooner, and then you'll be plunged into new inversions unless they end the debt system, aka full reset, which sees UBI in lieu of pensions, because all your bond debts that your pension funds have been investing in are worthless. Sitting with fiat in a bank now is exceedingly dangerous. Far better to be a member of the sniper community. You've got to be bold when everyone is afraid. You've got to be cautious when everyone is bold. At the top of property booms, at the top of dot-com booms, at Bitcoin 69, you have to be taking off, not being bold. Now, when the fear is here, you should be expending to become part of our community, to trade your way to true wealth in reset times. Equities to be shorted. Contracts, equities will survive any reset period, including shorts. Only full broker failure, and even still, if you own script in a share, you'll still own it. Remember, the control structure needs to keep their wealth. They have corporations and foundations that own shares and ETFs. Those will carry over to any new system. Sure, they may get digitized. Sure, they could get stored on the blockchain, but they will survive. They're not going to let their shareholdings disappear. Make use of those same things. We've even got one or two longs in the military industrial complex we can talk about when you come on board that you can also be doing. Note the strong rejection, the deepest dip on the 10s and 2s, the Fed's chosen yield curve inversions indicators. The biggest move up this month so far, 7 days still to go. In fact, 6, 2 of which will be weekends. So you only have 4 more trading days before this candle is locked. Look how much you've gone from minus 1.08 and you're wham, sub 0.4. minus 0.4, you're at 0.39. So you have properly reversed this, hard and fast in, harder and faster out, and then crisis, red box zone. As soon as you cross that zero, I think it's already going to be in on it. This was a real shock to the short end of the interest rates environment. They are no longer pricing much in terms of tightening. They are expecting real problems. That pivot for now is certainly on the cards, but it's not going to be a normal pivot. They're going to try hold you underwater for longer, and they're going to ensure a full-blown collapse. Real asset prices are going to deflate. Housing is deflating. Availability to credit is seeing car prices deflate. I can't tell you what's going on. We bought a new car and it was instantly offered with discount and with a prominent brand, prominent, prestigious, high reliability brand, instant discount of some value. Why? Because secondhand stock is not moving, my friends. New stock is not moving, my friends. They are all having to discount. Dealers are stuffed with their pipeline and supply chain with product. And they know lending is washing out. There will be no easy access to lending. Shotgun finance deals with 90 months to pay for 60% of the car. Those are going away. Yes, sir, Bob, do not take debt. Spikes in interest rates are controlled demolitions to your personal finances. It is a Trojan weapon to be used against you. This yield curve inversion is proving to me that very soon we will be crossing the zero line on the 10s and 2s. You've already had a cross on the 30s and 2s. That the key collapse event is here. The demand destroying event we have been warning about is coming. You need to have preservation assets. Pure gold link below. Go and book yourself some pure gold from really reliable, high quality sources, and silver bars and coins. Bullion vault link below. Dollar cost average every day. Micro habits. Automate your micro habits to slowly work in your favor. While you sleep, take a couple of dollars away and put it into precious metals for you. Then sell it up on the internet gold, turn it into real physical, and get out. Get the upside with it, then convert it to physical once every 3 or 4 months. You have the link to book to become a community member and make real dollar profits that you can convert into gold, silver, repo, prepper, homes, prepper. So important to think about your security and everything else that's going to be required in this environment where others do not have precious metals. So you need to think about it. This is your call to arms, guys. This yield curve inversion is telling you that demand destroying event is round the corner. Forget the narrative that they're going to deal with this banking charade. They are absolutely at the end of their tether. And this time you will get their solution. Problem, reaction, solution. They're going to hold your head under the water for longer. They're going to maintain the suffrage for longer, and then you will sign up for anything they put in front of you, including a UBI-based pension for all the debt that got lost that your pension was made to buy, including social credit scores, including lots of soft promises of not doing too much surveillance of you. You need to be off-grid with your finances. You need to hold your own wealth in your own hands using the legacy 10,000 years and beyond materials that have real scarcity and unique profits and do not rust, like the gold and silver in the links that we have below. You can trade. Book a call. First link below. This is my final warning. If you don't do it now, you probably might not ever do it. This is from the man that's called oil short twice, from $103 to $25. From $67 and the first time in the mid-70s down to 1 single digits. It traded zero, is now calling another 40%. You will see 30-something oil on the WTI contract, sub 40, and that is in a stubbornly high stagflationary environment. That's a big degree of demand destruction where you are in an inflationary environment. At the same time, a hot war is running. That's right. Lots of shorts to take. Till next time, thank you for watching. We'll catch you later. The links are all below. We look forward to welcoming those that recognize the unique opportunity that this reset will bring, with letting the market make the move for you, not oversizing, real money management, which we help and support with inside the community and our training materials. Till next time, I'll catch you later. Bye for now.